There's a couple of things in life that is always there. There is, for example, there's Santa Claus on Christmas. There are taxes if you make money. And there's Tom Lee when the market is going crazy, okay? So I'm really looking forward to dive into this video by Tom Lee on CNBC that he confirms that not only he is bullish for the end of the year, but he is doing actually quite an explanation what happened on Friday and why he thinks this is a fantastic opportunity for the next couple of weeks.
Welcome to the game, I'm the wolf of Dubai.
So welcome to this channel. If you never went on one of my videos, I welcome you because I'm looking for stocks that can go up 10, 20, 30, 40, 50x like I did for Tesla and Nvidia and Robinhood and Palantir. And my subscribers bought houses and apartments, for example. But I also never advertise any garbage financial service or crypto, kind of tokens or crypto broker. I advertise my own product only, and this is Extend Day Trading, where we trade for you. If you want that and you have $10,000, schedule a call with me. We want to average about like 8 to 15% per month. That means if you're starting with $10,000, you should be somewhere around 58 at the end of the first 12 months. And this is just the first year. And then, we want to do this for many, many decades to come. If you have $10,000 or more, schedule a call with me personally, and we see if we can help you as well. Now, if you are interested in CNBC, then Tom Lee. Maybe this is also the reason why you invested in Bitmine or want to invest into Bitmine in the first place, okay? And let's dive into the first clip, which is quite interesting what Tom Lee is actually saying on air to the American investors.
Markets bouncing back after Friday's drop. Joining us now, Tom Lee, head of research at Fundstrat Global Advisors and Fundstrat Capital CIO. Tom, just summarizing what your thoughts are this morning. I don't see a whole lot that has shaken your confidence that the market's headed up. You still see 7,000 on the S&P by year end. You do point out it's not cheap, up 36% since the April lows. You do outline some headwinds, but I think you're outlining more positives than negatives for the markets, even right now.
Yeah, in fact, I think JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is NVIDIA trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings.
Yeah, you've got positive reasons to think that earnings are going to do well in a time when interest rates are coming down. So that's just like an elixir for stocks that is very powerful.
That's right. And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1 month median return is almost 3% of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November.
Still got, we're not overly positive in terms of sentiment right now. So that's not late cycle, according to you, at this point. And still a hated rally, $7 trillion on the sidelines if people decide they want to go into stocks.
Yeah, I think conviction is a measure of whether or not the market is, pricing in too much good news. I think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting, or that, this is the reason to be buying gold. And if investors are that quick to call a top just on a 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines.
You have found a kind of everything's about crypto. You found a reason gold's up, and it's because of crypto. Not directly because of crypto, but you think the incremental buyer in gold there's gold-based stable coins, and people need to buy gold to back the stable coins. And that, you think that's enough to be up $92 all the way up to a new high?
Well, there is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today.
That's perfect. So the people that have been bullish on gold for so long and bearish on crypto and Bitcoin, they're finally getting their big rally in gold, and it's because of the thing they hate so much, crypto and Bitcoin.
Yeah, that's right.
That's so funny.
Tether is proving to be a good meeting ground between Bitcoiners and gold people.
Tom, can you just explain, though, to the extent we can understand it, within at least the Bitcoin world, just how much leverage there is in that system? Because I think one of the things that we were looking at Friday was the possibility, at least, that some of that selling, or maybe even a lot of that selling, came from margin calls at that time.
So this is quite interesting. So he believes that gold is actually going up also because of the crypto scene, okay? Tether is buying gold and they want to buy, everybody wants to have more gold, not because usually gold is going up if there's uncertain times, okay? This is like a safe haven asset, but now it's going up since many weeks and months because it's actually bought by crypto companies. So gold is going up because of the crypto mania on that reason. But he also said two more important things. First, he believes that the Fed, because of all what's going on, will be actually more dovish. That means that not only they are in the cutting cycle, but the probability is very high that they will cut at the end of October at their next meeting once again. Now, there's also the statement of Tom Lee that he believes that there's more 200 points, so somewhere around like 7,000 possible for the S&P 500 to go up towards the end of the year. So end of year rally confirmed by Tom Lee with the Fed as the main driver. And let's dive into the next club.
With 5 cents of collateral, you can buy $101 worth of a crypto. Now that's fine if someone's a really good trader. But of course, as you know, if something moves 5%, that collateral is lost.
I feel ignorant because I don't think I appreciated we were talking about 20 or 50x leverage. I mean, that's in a whole other realm. What percentage of the market do you think that makes up in terms of a share of what's happening here?
I think most buyers of Bitcoin and Ethereum are cash buyers because Bitcoin is $2 trillion. And you wouldn't be, you'd see that much leverage if it was out there. But for the active markets, I'm going to guess it's 5% of all trading is with perpetuals. But as you know, that's a lot of volatility, and it's triggers what we call collateral cascades, and that's what happened over the weekend.
Does that worry you, Tom?
Oh, yes. As you know, Warren Buffett has said, derivatives are the weapons of economic mass destruction. There's a lot of leverage both in the traditional financial world with structured notes and equity derivatives and private credit, and there's a corresponding system that exists in crypto. But I think that's why most people who own crypto should view these events as a lesson in leverage, number one. But two, as we know, volatility like this really gives an advantage to an investor.
He explains a little bit what happened on Friday. Specifically, crypto had a massive leverage event, and he explains that leverage in the crypto scene is attracting a lot of investors. You can very less cash and very less, money average actually big gains by leveraging your trade. And this works well when it goes up. But the crypto scene don't know that the president of the United States have always the biggest power right now. And he puts out a tweet and everything just tanks, okay? And we have also October, which is bad for the markets usually, not for crypto that much, but for the stocks. So obviously all the over leveraged people were absolutely washed out. And that's why you might have seen that even with the small push in the beginning of the market yesterday, we went a little bit lower, okay? Usually you don't have bottoms on Friday. Usually it continues on Mondays, and then, Tuesdays you have usually a turnaround. So you can see here the explanation that, it's worrying, obviously, but it's also the nature and why people are so attracted to crypto because of getting rich quick. There's two big Fed events this week. This week, Jerome Powell, the chairman of the Fed, will speak and we will get a little bit more info. Does he lead into cutting more? Does he lean into leaving the rates as they are? There's the government shutdown. People get maybe laid off from the government side. And also you will see that there is the next Fed meeting at the end of October. So very Fed heavy couple of 2 weeks, okay? And this is important for the market. I could also imagine that we are a little bit cautious what happens at the Fed meetings. So the market will stay a little bit, let's say, not all in or, kind of, aggressive now, especially after this dump on Friday. And everything will be a little bit more cautious, which I see as a fantastic buying opportunity. I bought $7,000 worth of Bitmine and I will buy $8,000 worth of Bitmine just today later on. So I'm extremely exciting about these prices, and I think that we will see a lot of volatility. But at the end of the year, we will all wish that we bought at this prices. So let me know what you do in this next couple of weeks. Check out xtendaytrading.com, and I see you obviously on the other side, because remember, the grass is greener always on the other side.